Ladies and gentlemen, welcome back to the channel. We have lots of breaking news to go over. There, for whatever reason, was a lot of speeches today from Trump and many other officials on trade, the economy, on this tax bill, and much more. Now, in your broader market news today, U.S. House Speaker Johnson says Trump will unify everyone. Wells Fargo says today, in a new note, buy U.S. stocks, avoid emerging markets. Wells Fargo advises investors to reduce emerging market stock holdings despite recent gains, citing weak long-term performance and structural risks like political instability and China's economic issues. The firm sees the U.S. and developed market equities as more stable alternatives and recommend reallocating to U.S. large and mid-cap stocks. For risk reduction, it suggests commodities or select fixed income assets. Political reporter on X says House Republican hardliners are so far resisting President Trump's push for them to fall in line. GOP holdout Norman told me he won't drop his push for FMAP changes to Medicaid, even if Trump says to. And a Politico reporter on X says, quote, I just got off the phone with the president. He's on his way over. I think the president is going to encourage everyone this morning to get in line and to get the votes done. We need to deliver this for the American people. U.S. House Speaker Johnson on SALT says we will get the job done. If you don't know what SALT is, it stands for state and local taxes. It's basically what you can itemize on your tax report. Trump says we have a unified party. It's not a question of holdouts. Donald Trump says the economy is roaring. He says that a couple of Republicans are grandstanding. He says the alternative to not passing the tax bill is a massive tax hike. And he says we will have a very good discussion. And again, this is something I don't think a lot of people are even thinking about right now from a Wall Street perspective, is what positive could come out of deregulation and this tax bill. It was something we were thinking about in January and in February, but was always kind of overshadowed by the looming Liberation Day and tariffs and what those numbers would look like. So we really haven't even had a chance to, price in what deregulation and lower taxes could mean for economic activity. It says we're not cutting anything meaningful. He is not changing anything to Medicaid, Medicare, and Social Security. China's Foreign Minister Wang Yi says China will support Pakistan in safeguarding its national sovereignty and territorial integrity. And a Punchbowl reporter on X says that Trump softens a bit on SALT, says that Democratic governors want it. Trump says that he is a fiscal hawk. And Trump today will make a 3 p.m. announcement with the Secretary of Defense. This is on the Iron Dome for the U.S., but if we get any other details that come out of this for a market's perspective, then that could move things. So be on the lookout for that. JP Morgan CEO Jamie Dimon says geopolitical risk is our largest risk. Apparently, Trump warned House Republicans, don't F around with Medicaid. JP Morgan's CEO says the odds of a recession are at 50%. No, they're not. Okay. No, they're not. This is good, though. This is bullish for markets because JP Morgan's CEO says recession odds are at 50% and they're clearly not, then there's a lot of room for people to get more bullish on the economy and more bullish on markets. Rubio says reaching a nuclear agreement with Iran will not be easy. U.S. House Speaker Johnson says House GOP had a great meeting with Trump. Trump says, I can't imagine a Democrat not voting for the tax bill, which you're probably not going to see any Democrats vote for the tax bill. Trump says, I am not losing patience. And he says it's okay if the Senate makes some changes to the bill. And Trump, on food aid cuts in the tax bill, says prices are all coming down. And Trump says that Middle Eastern countries aren't going to China anymore. And Trump was asked whether the U.S. will impose Russia sanctions after the EU meeting, and he says, we'll see. Stephen Cohen has said that stocks could retest their April lows, sees a 45% chance of recession per CNBC today. Again, when people are this bearish, that's like screaming buy stocks, right? That's screaming people are probably wrong on their assessments. Fed Hammock says White House tax bill complicates forecast. And she says that she doesn't want to overreact to trade. And Fed Hammock sees stagflationary outcome as a likely scenario. Again, even the Fed is like bearish right now, right? They're either concerned about growth, concerned about inflation. What if we don't see this big growth slowdown, this recession, and we also don't see the inflation? That's kind of my forecast here. In that event, where you don't see a stagflation, where you don't see growth stagnating and you don't see inflation accelerating, I mean, you would see stocks do very well. China's foreign ministry says the US and China should achieve positive interaction in the Asia-Pacific region. And Japan's tariff negotiator is to visit the US for the third time on Friday. So a Japan trade deal seems to be moving along. The percent of stocks trading above their 50-day moving average today sitting at 71.68%. So on the high side, more room to move higher here. But again, I've kind of been calling for a little bit of a slowdown in this market rally, and that's exactly what we're seeing. But I'm not forecasting any large decline at this point. I just don't see a reason for that unless trade tensions were to really ratchet up again. CNN's Fear and Greed Index today coming in at 70. Yesterday was at 69, pretty stable there, not moving around all too much at this point. Market momentum in extreme fear, stock price strength is greed, stock price breadth, extreme greed, put and call options greed, market volatility is neutral, safe haven demand in extreme greed, and junk bond demand in extreme greed. Now, Thursday will also be a pretty interesting day because we will get a new AI investor sentiment survey. Currently, as far as last Thursday, 35.9% of investors were bullish, 19.7% were neutral, and 44.4% were bearish. So, you still have a lot more bears than bulls. That's not what you normally see. And, again, that's another reason why I'm bullish on markets here, because people are so bearish. I don't think for logical reasons, right? The consumer is going to continue to spend as long as they have a job. And at this point, it doesn't look like people are being just massively laid off. Okay? Until we see layoffs, it's hard to be bearish on the economy when 70+% of economic activity comes from people spending all of their money. Now, as far as tomorrow, we really don't have anything economic data wise, really nothing. Mortgage application numbers will be coming out tomorrow. Some oil inventory numbers. Fed Barkin speaks at around noon, but that is pretty much it. We also don't have much as far as earnings are concerned either. Let's go ahead and get the most updated one here. Tomorrow morning, you have Baidu, Target, TJX. They're going to be important. We already had Walmart, though. Target is a little bit more of a higher income consumer base, I would say. They're not like, they don't try to capture the lowest prices. Okay, a little bit more discretionary. So if Target has good earnings, that's a pretty good sign for the economy. Definitely, that's the one to watch tomorrow morning. Tomorrow in after hours, Snowflake, Zoom, Urban Outfitters, and some others. And then Thursday, Analog Devices, BJ's, Advanced Auto Parts, and Pre-Market. And then in after hours, Deckers, Autodesk, Intuit, Ross, and Workday will also be reporting. So a couple of earnings still left, but really just it's gonna be slow unless we get some headlines coming out. This is part of, I think, the speed bump or the pause in this rally. Once we actually break out from here to the upside, start to get some momentum, that's where I think things are going to get pretty crazy, right? I think we're going to see a 20% rally into year end. Yeah, the next 6 months. But right now, we've already rallied a lot. It's time for a little bit of consolidation, but I don't really expect material downside like today. Down 0.25%, down 0.5%. That's kind of what we've been doing for the last couple of days. You kind of go down a little bit, you recover it, you go down a bit, recover. It's just a lot of that back and forth chop. That's actually really healthy that we're just chopping here and not just outright, going straight up or straight down. So let me know your thoughts on all of this down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.